Well, Trump finally did it. In a 55-minute press conference that he calls Liberation Day, he sent the markets down and then they went up and then they went down again. And what will happen next? I'm Louise Bedford, the host of the Talking Trading Show, and this is how traders excel. In this very special episode, I'm going to interview Michael Yardney. Michael founded Metropole. They specialise in creating wealth through property, and as you know, I'm specialising in creating wealth through the stock market. You are going to glean incredible insights from both of us, two experts with decades of experience under our belt in how to handle volatile times. There are some surprises in this episode, and you're going to want to take notes so that you can relish the opportunity that volatility provides for you and never shy away from it again. So listen to this show and make sure you take all of our advice and use it for your own personal benefit.
Hi Louise, we're living in interesting times, and it actually reminds me of the early days of COVID or the global financial crisis when there was so much confusion in our markets and the media kept bombarding us with confusing messages.
It is so true. And I think the natural reaction is to overreact, especially for beginner traders.
Yes. So I'd like to learn some lessons from the past, because I think having survived those tough times that you and I have teaches us more than actually thriving in the easy times, as some people have had in the property markets and also in the share market over the last couple of years.
We do get complacent. Even the experienced traders and property investors tend to think that the good times will last forever, and we forget that sometimes we do need to be nimble and quick and really cherish our mindset, look after our money scripts.
I think you're right there. So maybe let's start with talking about times of volatility like this. Why do you think, I know you've got a background in psychology and you've written books on the psychology of investing. So why do so many investors make poor decisions when it comes to times like this?
Look, I think we are a bag full of biases. We have got a nasty penchant to have a look at the most recent things and to elevate those things and to think that they are so very important, and we forget that deep time. And we also look for things that confirm the way that we're thinking. So that's recency and confirmation bias. Now, the interesting thing is when we look at the data, the stats are there have been 11,462 trading days since the 2nd of January 1980, and only on 22 occasions have the all odds closed down by more than 5%. So in our minds, we are thinking since the 80s, there have just been so many crashes and so many awful occurrences in the Australian market. But when you actually think about it, 22 days, that is the only number that you have to think of from 1980.
It's much the same with property, Louise, that people talk about property market crashes, and there have been certain segments of the market, just like certain shares, and have gone down as well. But overall, the Australian property market's underpinned by all the owner-occupiers who don't sell up, and property values don't crash and have never dropped more than 10% overall, and that only happened on a couple of occasions. But you're right that there is this confirmation bias and the recency bias, which I think is actually made worse by Google and things like that, because if you start looking for articles, or you go down a rabbit hole, don't you? It takes you down a rabbit hole and keeps bringing you up things along the same lines you're looking for to confirm your confirmation bias.
Yeah, it is so true. And I do like the idea that both you and I have been in these markets for the long term. So we do need to learn how to weather these storms. And for everybody listening, it's important as well. So I'd love your thoughts, Michael. How can investors avoid falling into that trap of paying attention to information that supports their view? Because especially especially when fear is high, that can be a very dangerous way to go.
Well, we've already spoken about be careful what you're reading and be careful who you're listening to just because of the way the algorithms work. But I think it's also worth remembering that the media sells newspapers or clicks on their website because of fear. Noise sells newspapers or media, but strategy actually builds wealth. It's not the media's job to educate us. It's the media's job to scare us into clicking on those links where advertisers have already paid to be on their website. So therefore, be careful who you listen to. And I guess you've also got to be careful about their experience, because as you say, you and I have actually been through this a couple of times. And you spoke a moment ago about biases, like understanding about investor psychology as well, and have done a number of podcasts on these biases, because we're not rational when it comes to money, especially at times of fear, are we?
It's so true. I can even feel it in those echoes from my childhood, and occasionally it catches me and I have to stop myself in my tracks before I actually go down that rabbit hole of my childhood and the way that I was brought up. And I think a lot of people are the same way.
Definitely. I think the other thing is diversify who you're listening to, get different viewpoints. Don't just listen to things that align with your views. Now, of course, that's it is natural to do, and it helps that confirmation bias, but maybe just be open to the fact that there's another way of thinking about things. And I think the other really big thing is focus on long-term fundamentals. Why have you invested in, whether it's property or the share market, or why are you trading? What's the reason behind it? And don't make 30-year decisions based on the last 30 minutes of news, Louise.
Yes, it is so true. Even the way that we think about ourselves, we think that we're the same person now than the person that we were 10 years ago and the person that we're going to be in 10 years' time. Actually, we are not. We are adaptable. We can change. And it is something that we can really focus on for our future self. Work out, who do you want to be? What does that person look like? Is that person cool under pressure? And if they are, how do you scaffold your way into being that ideal representation of your future self?
I think it's also easier for people who've been through it a few times, because the first time people experience downturns or market scares or turmoil, I guess it's human to be a little bit scared. But despite that, there are always pockets of the market, whether it's the housing market or the share market or trading, that give opportunities. How can investors train themselves to seek out those opportunities instead of stepping back and retreating? I'm seeing the current markets in both property, where people are just a bit nervous and sitting back for a moment. And I know you and I have spoken about our share markets, and you're my mentor in that. We're seeing opportunities.
We definitely are. And I loved what we were talking about at lunch the other day, where there are pockets of opportunity. So from the share market perspective, you might remember, Michael, that I run a macro filter, which tells me when I can and cannot trade. And it's a very specific filter. And right now, of course, the macro is off. However, there are some special situations, and these are pockets where there is a boom. Now, if you have a look at generally overall, there are some areas that are looking fantastic, and that is where you can allocate some capital towards. One of those areas is gold. So gold is a special situation currently as we are recording, but this,
By
of
the
course,
way,
can
I
change.
know you have an AFSL, so let me give the disclaimer. This is not financial advice. We do not know your circumstances. We're just talking in general.
Absolutely, and that is a good reminder. And the other area to have a look at is things that involve indices. So index trading currently, there are some wonderful plays that you can make. And I was so pleased to see that you really got what I was saying the other day, Michael, just as I turned to you for my own property advice and my inspiration. It's so nice when we can share strategies between the two of us that actually both of us can get a kick out of in the other person's field.
Well, in the share market drama after Trump's tariff announcement and his re-announcements, and it's changing and it'll change between the time we discuss this and people listen to this podcast or watch us. But it got me thinking of one thing. Thank goodness that we both invest in property. There's something strangely comforting about the opacity of property prices during market turmoils. You can't obsessively check property values every 20 times a day, even though I know there are people who'd like to try and do that. The information gap, the lag of information, can sometimes seem frustrating, but it's actually, in my mind, a psychological superpower. It prevents panic selling in property. It forces long-term thinking, and it stops you making decisions in the heat of the moment, emotional decisions that you're going to regret later. Sure, I believe even in property there are turbulent times ahead, but I see our property markets being really well positioned to weather them. The RBI data shows that less than 1% of households are currently in negative equity. In other words, most people have got significant wealth in their properties. 50% of homeowners don't even have a mortgage. Now, this means even if Australia does have a bit of an economic downturn because of the overseas issues, or if unemployment rates rise a bit, most borrowers are going to have the flexibility to manage their situation, including the ability to sell without a loss if they have to, and I hope they don't. So I think Australia's overall financial resilience means we're not going to have the recession that some countries may have and America may have. Our economy is well positioned, and Louise, the Reserve Bank's interest rates are still high enough for them to be able to drop them a few times if need be to stimulate our economy. So yes, we may have a bit of a tough time, but it's not going to be as bad as the media tells us.
Yeah. You know, as well, when you look back through history, the majority of multimillionaires and indeed billionaires, they initially were created because of times like this, where there
Yes.
was blood in the streets, people were screaming, and those cool-headed individuals looked for opportunities. I think we really do need to take solace in that, because if you can keep your head while everyone around you is losing theirs, you're going to be in the best possible position.
Go back to the big picture and focus on fundamentals, Louise.
Yes, yes. Well, fundamentals for the property side, the charts for the chartists out there. So
Yes.
yes, that's absolutely the core of truth. But the media does take a particular pleasure in beating up these fear, greed responses. And right now, the fear index is very high.
Isn't
That
it?
is unfortunate because it does tend to turn off your higher level reasoning. You start thinking in a very small way, and you start thinking about safety and protection, and it becomes very tribal as well. We know that philanthropic donations are down, which means people have stopped looking outside of themselves and looking to see who they can help. They're thinking in a very insular way, how can I make the most of this and stop the bleed for my particular family? So every headline is screaming danger or doom. I'd love to hear your thoughts. How can we stop being bombarded with this noise, or at least stop being so reactionary to it, Mike?
I guess it goes back to what I said a moment ago and go back to the fundamentals. But in property, we actually, before we even start selecting a property, talking about location, talking about budgets, we, for our clients, put together a strategic property plan. We work out where they are now, where they want to be in the future, and how they can get there and what they should do to get there, but just as importantly, what not to do. And then just stick to the plan, knowing that this too shall pass. So if you have a plan and a strategy, I also think that helps partners, because very often you'll find one life partner maybe a little bit different to the other, more interested in the share market or the property market. But if they've got a written documented plan, and I know that you, for traders, you give them a plan as well, stick to the plan. That's why you've got it.
I like that. I do think my trading plan has saved me so many times where I have had that gut feel, that emotional reaction. But the thing that I do think is interesting is what you were saying a little bit earlier about how sometimes that short-term volatility can threaten your long-term plans. How can investors and traders remind themselves about those long-term goals?
Well, again, it goes back to having a plan and understanding that the markets don't need to be perfect. Your plan should be bulletproof. If your plan only allows you to make money during boom times or strong times, Louise, it's not a strategy. It's not a plan. A solid plan in place makes it easier to stay focused. But I know at the moment, a lot of people are actually sitting back on the sidelines or wanting to pull the pin. They're tempted to quit. What would you advise them?
You know, as you were talking then, Michael, I was thinking back to, gosh, I think it would have been about 15 years ago. I was wanting to do a property deal that clearly you knew was rubbish, and you were so tactful, and you put your
I'm
hand on
not
my arm.
tactful.
You put your hand on my arm and you said, well, should we just examine the facts together? Yes, Michael, we should examine the facts together. That is a far better idea. You see, what happens, I think, as traders and investors is we get caught in a mood tunnel. Now, either we swing towards the incredibly positive, the greed, the everything will be perfect side of the pendulum, or on the other side of that is everything's crashing, we don't know what to do, we're out of control, and we have to be protective. So somewhere in between those two extremes is exactly where you want to be. Having that clarity of thought so that you can examine the facts. And if you don't have a Michael Yardney across a lunch to put his hand on your forearm and say, look, let's just have a think about this before you jump in, you need to do this for yourself. You need to be your own best friend with this. You know, often I think we work against ourselves. We feed into our own fears. We feed into our own greed, and we need to be aware of that before it goes too far. Listen to that little voice telling you that you can do no wrong or that everything is going awfully for you.
I guess in times of uncertainty, emotions are expensive and fear isn't a strategy. I guess hope isn't either. So that's why we keep coming back to having a strategy. That's why smart investors have a plan that tell them what to do and, as I said, what not to do. And I guess it's probably an appropriate time to pull out that famous quote from Warren Buffett, who said, be fearful when others are greedy and greedy when others are fearful. However, Louise, I found it's much easier to say that than do that, isn't it? It's much easier to follow during a strong market than in downturns.
It is so true. And often we get caught up in herd behavior. What everybody is doing is what we are going to do. So what do you do personally, Michael, to stay calm while other people are panicking?
Well, interestingly, I still have mentors. Now, to be blunt, not as much in the property market, but I do speak to various economists and other people, guests on my podcast, regular guests that people would know, who similarly have had many years of experience. I think isolation is one of the challenges a lot of people have. I know that you run a mentor program to help people with that in the share trading. Similarly, we help our clients, and I've run a mentorship program for a long time as well. But I think to try and do it on your own, it's too easy to get sidetracked, isn't it?
Yeah, it is so true. Sometimes you do need that voice of reason.
And you've got to trust your strategy. That's what it's there for. Stick to the system. Don't mess it up. Even if it feels like everyone else is making a different choice. As I said, if it only works in boom times, it's not really a strategy. It's luck.
Yeah, absolutely.
And don't let the market's ups and downs be your compass. That's got nothing to do with what you should be doing.
I like
Well,
that,
I'm talking more
actually.
about property.
Yeah.
Maybe shares, it's different with your trading, isn't it?
Do you know, though, the people who can stay that little bit detached, they're the ones who do the best because they can actually sit back and look at everything objectively. I think it's when we're in the thick of it and we can feel every moment in that share, every tick up, every tick down, that is when we get a little bit sidetracked.
Well, at the moment, people are nervous. Confidence has gone down because it's not just the share market and the property market, but the economy, elections, geopolitical problems, climate risks. Everybody's got things to worry about. You've got a degree in psychology, and I know you think a lot about the psychology of money. And to me, property investment is really a game of psychology as well, isn't it? As is share trading. What practical grounding techniques do you use, Louise, to help when things get difficult, when you feel you may not have as much control as you'd like?
Yeah, I love this question, actually, Michael, because there are things that we can do to put ourselves into a success environment, not only just with our external, but internally. So if we're feeling low, we need to hype ourselves up. And if we're very hyped up, we need to bring ourselves down. So let's talk about some of those areas. So if you're feeling low, one of the quickest things that you can do to enable a bit more energy to flow back into your system is physical exercise. So
Yes.
get up, Do some jumping jacks, don't just sit there in it. I think that's a mistake that people make because you do need to feel that adrenaline come back into your system. But currently, that's not generally what people are thinking. Currently, what they're doing is they're having a big emotional adrenaline and cortisol dump into their system, which is speeding up their heart rate, which is switching every energy system into their extremities rather than their brain. So you can't think very clearly. And if any of that sounds familiar, if you have sat in front of a screen and seen a share dropping with your cash in it and you have felt a physiological reaction, I have got a beautiful technique for you. Now, I'm not sure if the equivalent would be there completely, Michael. What happens to a trader when they experience, a trader in the property market, when they experience a bad valuation? Is it that speedy in terms of physiological effect?
What I did when the share market dropped was I didn't look at the prices of my shares because I really, really didn't. Heard on the news the market dropped 20% and I thought, because and anyone who tells you property only or shares only, I'd be very cautious of them and be running away because they've probably got a vested interest. And I know both you and I have a balance of things. But with the property market, so with the share market, I didn't look. But I actually do what you talk about with exercise. I take my dog Lincoln for a walk every day and in the morning, and I know I feel better after that. And interestingly, I listen to podcasts. I'm an auditory learner, so I actually find listening to podcasts on our walk helps me as well. I have not tried the jumping jacks, but I am going to try that.
You can give
I
that a
don't know if
go.
I get a
Yeah.
bad valuation that jumping jacks is really going to make me feel any better, but it's really, I guess, important to get back to the fundamentals and look at the long-term side of things. And properties, there are the weekly indexes, monthly indexes, and there's even CoreLogic has a daily index. I wouldn't be looking at that. You really got to just go back to the big picture and look with a telescope rather than a microscope.
So let's talk about a strategy that you can implement straight away to bring you down into your body again.
Yes,
because
please.
a lot of this can be a little emotional hack, a little trick that you can use. And these are tools that you can pull out of your pocket when you most need them. Now, this is the 3-2-1 method. Now, Michael, I'd like to put you on the spot here. I love doing that. So I'm going to do this with you and we're going to do it together. So imagine that you are hyped up. Okay. So you're a little bit overwrought about something that's happened in your trading or in your property portfolio. So the first thing I want you to do is to name 5 things that you can see. Do it for me now, Michael. What are 5 things you can see?
I can see now.
Yes.
The computer screen, I can see
Yes.
Louise Bedford. I can see a whole lot of things on the shelves in front of me here. I've got my iPhone next to me and I've got my cup of tea next to me as well.
Excellent. And what are 4 things that you can touch?
Touch, my microphone, the lights that are here, my cup of tea that's here, my iPhone, which I forgot to put on airplane mode, so I'll do that as well. I'll touch it while we talk. Is that 4 things? I think
That's
so.
4 things, yes. And what are 3 things that you can hear? Now we're getting to a little bit of the pointy end because that's going to be a little trickier.
Yeah, that's going to be difficult because I've locked myself in my home office here, so I can only hear Louise Bedford. I can't hear anything else at the moment other than quietness.
Do a deep
So
breath.
I would normally at other times, I think, have more options.
Yep. And if you do a deep breath, can you hear yourself breathe?
Yes, I can. Yes.
Okay.
Yes.
And then sometimes you can pick up a little dog in the background or a bird. So you're trying to
And hear the ringing in my ears.
There we go.
Does
There
that
you go.
count?
That's number
Because I
3.
definitely have a bit of tinnitus, but that's always there, and I've learned to cut it out until I start looking for it,
Till you
Louise.
focus on it. Exactly. And 2 things that you can smell.
Well, there's normally my dog Lincoln would be here, but he's not here at the moment. I guess it's back to, the tea actually, the Earl Grey tea smells nice.
The tea. Yes. And 1 thing that you can taste.
Well, I haven't had my breakfast yet, but I am going to have a sip of tea and I'll taste that.
There we go. All right. So that's the 5, 4, 3, 2, 1 method. So it's designed to get you back in your body. Now, I was going to kick off with breathing techniques, but some people don't relate with those. So I wanted to provide a little bit of variety. We're talking about using your senses to anchor yourself in your body again so that you are in touch with the present. You're not thinking about the past. You're not thinking about the future. You are in your own body. Now, that is one of the key techniques that has got beautiful back-tested double-blind studies behind it. And I do think it's a fun thing to do. It's very quick. People don't even notice if you're doing it, if you're sitting in an office. It has been also shown to ward off panic attacks and to decrease our physiological cortisol levels, our heart rate, our sweat response. It's absolutely something that you can do on the spot. And the other thing is, of course, to become aware of your breathing and to do a deep, slow breath in and to do a longer, slower breath out. So breathing in for the count of 4 and breathing out for the count of 6, for example. They are two methods that are just going to give you the instant calming, smoothing of your emotions so that you stop that pendulum swing from extreme to extreme.
Thank you for reminding me of the breathing exercise. I had not heard the 5, 4, 3, 2, 1, but I can definitely see there'll be times when that'll be helpful. Really good idea. Thank you very much. So despite that, though, and despite your understanding of psychology, I bet you there's been times when you've been tempted to make a snap decision, maybe walk away from the market or think emotionally. What's pulled you back? How have you managed? How have you handled that?
Yeah, I am a high flight risk, Michael, a high flight risk. So I'm going to be vulnerable here and admit to you, I have to talk myself down from the ledge so often it would shock you. I feel like sometimes I'm a bit of a duck where it looks all calm on the outside, but inside I'm freaking out. And instantly I've been able to name just recently my inner lunatic. Now I call that Flighty Louise my inner lunatic, and I've been able to visualize it and give it a voice. So do you know those like waving out the front of car yards designed to attract attention, inflatable people?
Yes.
Yeah. So picture that, but also combine that with that guy's voice from the Aliens movie. Game over, man. Game over. Oh my gosh. Game over. That is my inner lunatic. Now, after I was able to provide form to this inner lunatic, I've talked about my inner lunatic for years, but I've never been able to give it that pictured form and the voice. That has really, really helped me because I've seen that inner lunatic pop up several times. One of them in particular was after I made an option trade. I had overextended myself into oblivion. I'd gone out shopping down to Bridge Road and handed over my credit card literally dozens of times. And then on the final purchase, I realized, hang on, what if that trade goes wrong and it doesn't work out for you? I pulled back the credit card and said, sorry, I can't take this. And I drove home. It was a horrifying drive home because I was exposed to the market $700,000 more than I could afford. I closed out the position and then I had pretty much a full panic attack on my bed under the doona as I realized I didn't know what I was doing. Yes, it was years ago, but it seems like yesterday. It was so prominent in my mind. And I do think if I had have had that grounding technique, that would have helped me, but I did not. So what pulled me back is that I realized I didn't want to do anything else. This is where I felt my future lay, was so sure that this was my future and that this is where I belonged, that even if I had a few bumps, even if I had a few hysteria, inner lunatic taking over moments, it's not where I wanted to stay. I wanted to be that version of the future me that was cool and calm and that had all of the bits around me and my family and had that clarity to be able to see. That is who I wanted to be. And she was so clear in my mind, even in that moment, that I realized I couldn't betray that future self. So I think what you were saying about having that longer term view was something that really suited me and that I think it's pulled me through a lot of these knee-jerk reactions that say, run for the hills, because I can't run for the hills. This is where I belong and this is what I do.
Well, I think that this volatility is, again, it depends if you're a trader or a long-term investor. It's an opportunity to take advantage of a sale rather than a signal to sell. Again, if you're a long-term investor rather than a trader, I see a lot of people, hear a lot of people suggesting that this is a fine for being in the market. They're missing out. They're losing out, when in fact it's just, in my mind, a fee. Now, that's words I've learned from Morgan Housel, who writes a lot about investor psychology as well. These volatilities are a fee for being in the market, not a fine. It's just part of the cost of being a long-term investor. So try not to react emotionally. Just respond strategically. And you don't have to know the future. You can't predict the future. You just need to avoid predictable mistakes and be comfortable that the underlying fundamentals are sound. Just like you said a while ago, that the share market very rarely has these crashes over the long term, and the property market even more so. It's much less volatile just because of the time to get in and the cost to get in and out of the.
Yeah. And I think we are very subject to who we listen to. What do we watch? Who are the people that we're associating with? What is feeding into our psyche? All of these things are things that we can control. So look at the things that you can control. And the things that you can't control, I think it's a good thing to do your avoid looking at that share price if there's nothing that you can do about it. Personally, for me, I always look at the share prices because I make sure that I'm adhering to my stop loss. But if you don't have that mentality, and if that's not where you're at, if you've got investments through a superannuation hedge fund manager, for example, and you don't have the ability to pull the pin instantly, I love your strategy. Shelter. Make sure that you understand the things that are within your control, the things that are not, and avoid the things that are not. So that is some of the wisest advice, Michael. I love that.
Louise, to wrap up then, if somebody's watching us or listening to this and feeling a bit wobbly, you've already given us a number of great ideas, but can you maybe give one other solid action that they can take away to feel a bit more in control, recognizing that the market is going to keep throwing these things at us?
I think becoming aware of your own personal triggers early, that is a real key. Because if you have got time on your side and you're allowing yourself to snowball, that is a very difficult situation. So one of the things is, if you're feeling a bit wobbly, you have to be really careful that you're recognizing those early triggers, allowing yourself to get into a snowball situation where those triggers have been ignored and then you've got your emotions into a heck of a state. That is actually harder to fix than if you had have recognized those early triggers. So take a break, step back, go for a walk, do something that's getting yourself into your own body again, patting a dog, exhausting yourself at the gym, getting back into that state where you can control the things that you can control, and the things that you can't control, then you push aside. And I think that is something that you can really do even today, starting right now.
Louise, I've had fun. We always have fun with our personal chats. We catch up for lunch regularly, and this was great, sharing all these experiences with our viewers and listeners. Now, for people in my audience who are not familiar with you, I'll leave a link in the show notes, and you run a podcast regularly, Talking Trading, where you talk more about trading, but you've also written a number of books, and I've got a copy of your most recent one here too, about investor psychology and how to boost your trading performance with powerful strategies that do work. So I'll leave a link for that as well, and people can get that on Amazon, or they used to say wherever good books are sold, but actually very few books are sold in bookshops anymore. It's much easier to get them online, isn't it?
It's so true. And also come and visit me at tradinggame.com.au and pick up my free trading plan template. What that will do is give you all of the things that you need to consider in order to be a real success in the markets, not just today, but also for the future. And for everybody who I'm sure already knows you, Michael, but for everybody on my show who hasn't been fully introduced to you, Michael is on our expert panel at Talking Trading. He's one of our most regular guests. And Michael, what can people do to stay in touch with you?
Well, the Michael Yardney podcast, if they like podcasts. And I do one with leading demographer Simon Kirstenmacher, Demographics Decoded, which is talking about the trends shaping our futures. Very valuable for business people, investors, entrepreneurs. And I have a daily newsletter at propertyupdate.com.au, where you'll get information from a whole range of experts on the economy, property, money and success.
And I love that. I love that propertyupdate.com.au. I think that is such a winner. It definitely keeps me on the straight and narrow. So this is a simulcast. This is not only going out on the Michael Yardney podcast, but it's also going out to my Talking Trading. So I love that. I think it's wonderful when we can combine forces, because a lot of the strategies and especially the mindset techniques that work in the property market also work in the stock market. My strongest stock market performers originally came from the property market, and more often than not, they came from you, Michael, from your client base.
Fantastic. So thanks. We'll have to keep doing this again more frequently. Catch up with you again soon, Louise. Thank you.
Happy trading.